Explaining personal loans. A personal loan lets you borrow money to pay for something special, like a holiday, car, or home renovations. You have to repay it with interest over a fixed term, usually between 1 and 7 years. Getting the best deal on a personal loan can save you thousands in interest and fees. When considering a personal loan, it's helpful to understand how much it may cost. The annual percentage rate on a personal loan represents the annualized cost of repaying the loan based on the interest rate and fees. The APR and loan term can determine how much you pay in interest total over the life of the loan. For example, assume you have a $10,000 personal loan with an APR of 7.5%. The loan has a repayment term of 24 months. Using those terms, your monthly payment would be $450 and the total interest paid over the life of the loan would be $799.90. Now assume you borrowed the same but with a different loan term. Instead of a 2-year term, you have a 3 years to repay the loan and interest rate is at 6% instead of 7.5%. Using those terms, your monthly payment would drop to $304, but your total interest paid would increase to $951.90. Comparing the numbers this way is important if you want to get the lowest monthly payment possible or pay the least amount of interest for a personal loan. You can work this out yourself or use a simple online personal loan calculator that can help you determine what kind of payment amount and interest rate are the best fit for your personal budget. It's important to get the best personal loan for you. Most people shop around before they pick a holiday or buy a car. Shopping around for the right loan can save you thousands in interest and fees over the long term. Where can you find a personal loan? The first place to look for personal loans may be your current bank or credit union. Your personal banker can advise you with what types of personal loans may be available and the borrowing options for which you are more than likely to qualify for. Personal loans can also be found online. Numerous lenders offer personal loans online. You can apply electronically and get a decision within minutes, and in some cases get funding in at least 24 to 48 hours after loan approval. Another major factor is whether the personal loan is fixed or variable interest rate. With a fixed interest rate, your repayments are fixed and won't change over the loan term. You'll know exactly how much will come out of your bank account each month. With a variable interest rate, your repayments will change if the interest rate changes. If interest rates rise, your repayments will be higher, and if interest rates fall, your repayments will go down. A loan with a variable interest rate usually has no early exit fee. This might be better if you're planning to pay the loan back early. The interest rate you get on a personal loan can be different to the advertised interest rate. Your interest rate depends on things like your credit score, income, expenses, and savings. Secured and unsecured loan. With a secured loan, you provide an asset, such as your car, as security for the loan. If you don't pay the loan back on time, the lender can repossess your asset and sell it. With an unsecured loan, you don't have to provide an asset as security, but the interest rate will be higher and you may need a loan guarantor. If you fail to pay back the loan, the lender can still take you to court to get the money back that you borrowed. Loan guarantor. Some lenders will give you a lower interest rate if you have a loan guarantor. Before you ask a family member or friend to go guarantor for you, make sure that you both understand the risks of a guarantor. No interest loans. If you need to borrow up to $2,000 quickly for essentials, like a fridge or car tires, see if you can get a no interest loan. These loans have no interest, no fees, and a quick approval. Comparing personal loans before you shop for what you want. Find out what you can spend and how much your repayments will be. These are some of the features that you should compare. Comparison rate. A single figure of the cost of the loan includes the interest rate and the most fees. Make sure that you're comparing the same loan amount and the same term. The interest rate. The rate of interest you'll pay on the amount borrowed. Application fee, the fees when you apply for the loan. Other fees, such as the monthly service fee, the default fee or missed payment fee, and any other fees, read the terms and conditions to find these when getting your personal loan. Extra repayments, whether you can make extra repayments without paying a fee. Loan use, some loans can only be used for specific things like buying a car or home renovations. Make sure you can use the loan for what you need. And loan term. Shorter terms often have lower interest rates. Longer terms usually mean lower repayments, but you'll end up paying more interest. Comparison websites can be useful, but they are businesses and make money through promotion links. They may not cover all your options, and keep in mind when using these websites that you should also do your own research. In terms of paying off your loan, make sure that you have enough in your bank account to make the repayments when they are due. If you don't, you'll be charged a missed payment fee. Preparing a budget is a great way to stay on top of your loan repayments. It can also help you plan for extra repayments to pay off the loan faster. Before you start making extra repayments, check if there's an early exit fee. And in terms of managing your loan repayments, if you have trouble making loan repayments, see how to get debt under control for help and what to do and who to contact, and reach out to the bank or credit union to see what would be the best steps forward. What are your thoughts on personal loans, and have you ever got one or looked at attaining one? If you found this video useful, subscribe to Business Ventures for more financial and investing content.